What is up, everyone, and welcome to another Bitcoin market update. In these videos, you'll learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. Before we dive into the analysis, just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. All right, so starting off on the monthly time frame here for our good friend Bitcoin. So we've got this equilibrium pattern here shaping up on the monthly time frame with a high, low, potentially a lower high, potentially a higher low, and then this, can get tighter and tighter until eventually it breaks out to the upside or breaks out to the downside. Now, on these patterns, when you see an equilibrium pattern play, what you're seeing is the price contracting and tightening up. And what that leads to is it's kind of like a rubber band where you stretch a rubber band and then eventually when you let go of one side, it snaps. Now, when it snaps, in this case, because this is a monthly time frame, this pattern is going to have momentum along with it. So what that means is if this breaks out to the downside, we'll likely see continued downside for several months. If this breaks out to the upside, we'll likely see continued upside for several months. So that's something that we need to keep in mind on this monthly time frame. We had a parabolic run up. Okay, we know how market cycles work. We know that eventually after a parabolic rise, you go into a drawdown. And this is potentially what we're seeing right here. So we need to understand that a lower high is bearish. So if we set a lower high in the monthly time frame, people are going to be going short as soon as they see that. So we need to keep in mind that it is a very real possibility that we go below this low at some point in the coming months, because this equilibrium pattern could break to the downside. And if we look briefly at the 3-month time frame, which I talked about in yesterday's video, this candlestick right here, this black candlestick, is very bearish. So when you see something like that, where the body of the candle is extremely long and you see it came right after a very bullish candlestick, this is what we consider to be a potential reversal candlestick. So, and this is coming on the 3-month time frame, which is virtually the highest time frame you can look at for Bitcoin without it being obnoxious. This candlestick is showing us that we should be setting a high right here. And we haven't set a high yet because we haven't broke the low of this candlestick or the previous monthly low. So, until we break the 3-month candle's low, we don't have a high yet. So we need to keep that in mind. And that low is that monthly low right here from June. So this is what we look at. We look at the high time frame so we can go down to the lower time frames and make informed investment decisions on the lower time frames based on our high time frame bias. So right now the bias is neutral because we're in an equilibrium pattern. We haven't broke this to the downside or to the upside, and we haven't validated this as a lower high yet, but I did say on this rise in price that we're seeing right here, it is likely that we will set a lower high somewhere below this previous high because of the magnitude of the move, which I always talk about. So if we look at the magnitude of this drawdown, we drew down about 56%. Okay, so that's very significant. That's a significant drawdown. So what that means is for us to come back up from our June low and break to a higher high, we'd need to go up 126%. So what that means is that's a significant run up in price to do in one stab. It's more likely that if we are to try and go to a new higher high, we'll have to come up, form the lower high, potentially right here, come down, form a higher low, and then come up and form a higher high and change the month, or not change, but confirm the monthly trend to be bullish. But it's going to be dependent on if we can form that higher low when we come down, because it is very likely that we're setting our monthly high either this month or the following month, in my opinion. So we'll keep an eye on that. If we go to the weekly time frame, we can see that we have set our weekly high right here, and now we are trading down. So we had a parabolic rise here from our low that we set on July 19th. So once we set that low, we had a short squeeze, meaning the people that were betting the price was going to go down were forced out of their positions because the whales pushed the price up and forced them to close out their positions, causing the price to rise up significantly. Then we got some short-term bull trend flips, and that momentum kept the trend going up until about 53K. Once we got to 53K, we had a significant drawdown. So now the question is, where are we going to set a higher low? And the reason that I think we're going to set a higher low is because of the magnitude of the move once again. So we came up and rose about 81%. So for us to come down and break to a new lower low, we would need to go to about 45%. Now it's possible, but I do think we will form a higher low on the weekly time frame before coming down for a lower low if we are to go that route. So on the weekly time frame, where is the potential support? Well, there's a support level here, the light blue zone, which we've already came into, and this is from back here in our bull trend. We had a low, high, higher low, higher high, and we see that we have this nice blue support zone that we bounced off of, several times, and we'd never closed below that. If we end up going into this zone again, though, it's unlikely that this zone is going to continue to hold a support forever, because it's already held so many times. So if we come back into this zone after forming a lower high and we come into it again, we may have one more small bounce, but then eventually we're going to go through that zone as well. If we look at this, you can see, it's very clear when you're looking at a market cycle what you're looking at. This right here is the parabolic rise. Okay, so that's very simple to see. You can see the price curls up and just goes parabolic, right? This is when people are euphoric up here. This is when people start to become too risky with their leverage, and then you get a situation like this where the liquidations cause the price to draw down extremely quickly, and we see that luckily we had a support zone that we kind of consolidated into. Here's another bounce, and now potentially we might see the actual kind of destruction of all the people that are going long in the coming weeks, and we start to see something like this. So if we look back here, here's the same sort of scenario, right? Well, this chart isn't really doing it very much good, but well, we'll look at this at the end. How about that? We'll look at this at the end. Real quick to go down to the lower time frames, and then we'll look at the market cycle. If we look at the 3-day time frame, we just printed a new resistance zone, and this is this gray zone right here from our bull trend right here. We got 2 candle closes above this key high, and then we closed down below this zone and pushed right through it. So once we close below this with 2 candles, now this is strong resistance. So if we come back into this on the 3-day time frame, this will likely reject price lower, so that's something that I'm keeping an eye on. If we look at the single day time frame, look at the pivots. The pivots are providing a bit of support here, so we got a single bounce there, another bounce there, and now we have this what we consider a Darth Maul candle, which is a long upper wick and lower wick, breaking above the low and high of the previous daily candle, and we're just kind of chopping around. So you can see the EMAs here are starting to tighten up. The investor EMAs are starting to weaken and constrict, and when that happens, we're getting closer and closer to a scenario where we start to break down. So that's something that we need to keep in mind because initially, we said right here was a potential good buying opportunity. We get a little bounce, we get another bounce, and now it's starting to look like these EMAs are not supporting price extremely well. They're still operating above the bottom of them, but we keep stabbing into them like we want to go lower. So they won't hold up forever, and then if we do end up closing below them, they'll end up being flipping into resistance, similar to how these flip to be support here. So they're resistance here, we go above them, we come back into them here, and they're support. So we'll watch for that in the coming days. On the 12-hour time frame, you can see right now another Darth Maul candle here with a liquidity grab above this high as well as this low. and now we just got a lot of indecision in the market here. So we'll see what we end up getting here. But right now, this gray level is the level that I was really watching for. If we get a candle close below, if we get this candle to close in 4 hours below this gray level from September 11th, this will end up being a resistance zone for price. But because the wick is already like through it, we may just see a push through this zone on the first test. We'll need to see a continued push down with no wicks going into this zone for this to end up really being a valid resistance zone to potentially go short on. So that's something I'm keeping an eye on. All right, now let's go over and look at quickly a little bit of market cycle action here. So if we go to the Coinbase chart, hopefully I don't have just a bunch of nonsense on here. All right, there is some nonsense, but it's not too much. So let me just delete this real quick. This is too much nonsense on here. All right. Almost there. Okay. All right. So if we look at this market cycle down here, we can see very clearly how this played out. Okay. So if we look, we have our curl up, we have our crazy parabolic rise, and then we have a stab down, a lower high, and then a lower low. So once we confirm that, then we go into a bear market. So now you can see that we're starting to constrict, and we get tighter and tighter, and then eventually we break down. Now once you break down, what we end up seeing is we see this kind of consolidation period. Now this is accumulation right here. So now you're starting the next market cycle. So now you go into the next market cycle and you're starting to see the early trend phase. So if we look at the early trend, we start to see us go up here and start to trend. Now once we get this candle, we're bullish. Once we get this candle. Now you can see thereafter we get our nice parabolic rise. Whoops, didn't mean to grab that. I want to grab this. We get a nice parabolic rise, and then what happens? We come down, we lower high, lower low. And then after that point, we go into a bear trend. So you can see that once we go into that, you can see here is your kind of bear trend. And then this is where, we just had a fundamental event that just kind of screwed the pooch on this one because we had, obviously COVID. But then here's another market phase. So now we're getting into early trend phase again. So you see we're starting to trend upwards. That's this area right here. Okay. Then we get into the parabolic rise once again. So if we look, here we have our parabolic rise. Once we get that parabolic rise, then we get our drawdown where we come down, lower high, boom, lower low. Now we're coming up again, and you could honestly even argue that if we zoom out to the monthly, this is just the beginning of a potential bear market. So we have a high, we have a parabolic rise, we have a high, low, lower high, and then potentially we might go down for a lower low to return to prices down here that people, a lot of people would shock a lot of people. Now you need to remember that when you're looking at the markets, the places where the least amount of people are expecting the price to go are usually where the price is going to go. So if everyone is bullish or everyone is bearish, it's likely going to go in the opposite direction. And on this rise in price, we've converted a lot of people to being bullish. So now it wouldn't shock me, I'm not saying that I believe this, but it wouldn't shock me if we went down and did go into a bear market and traded in prices down here in less than the $20,000 range. It seems like a radical concept now, but consider the fact that, when we were down here, these prices seemed like a radical concept as well. So nothing is out of the cards when it comes to the price action for a volatile asset like Bitcoin, and we need to keep that in mind when we're thinking about pricing in and out of different investments. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our global Telegram channel. This is free to join, and you can join over people from over 15 different countries in our chat, and every Sunday we host a Zoom meeting where we discuss a variety of different topics with our community members, such as different dApps we're looking at, different projects, different cryptocurrencies, and a variety of other things as well, like news and other things that we like. So join that and check it out, see if you like it, and until tomorrow, or until I talk to you next, onward and upward.